Thank you very much, Kathy. Well, we start here tonight. Finance Minister Enoch Godongwana will deliver his maiden medium-term budget policy statement this Thursday amid an ever-growing list of public demands. If South Africans are really not talking about Eskom blackouts, they are talking about a public sector wage bill or infrastructure investment. Momentum Investments conducted research looking at the most crucial parts of the mid-term budget, and for those details, we are joined by Ian Scott, the head of Momentum's Fixed Income Investment Unit. Good evening, Ian. Let's start with Eskom, the big issue this week and has always been for the past couple of years. The Black Business Council just called for the CEO to resign. They're demanding, a meeting with the president. You have mentioned as part of the 8 priorities that you are looking forward to in the MTBPS as one of the issues unbudgeted bailouts. And we've seen those unbudgeted bailouts, and you've mentioned Eskom that might still be needing 200 billion rand from government as a bailout. Tell us more.
Good evening, yes. If you look at the report, well, we're not surprised that SOE's finances are in such dire states that they probably would need more bailouts, and it's probably much more than Eskom. You probably work out that Transnet, Sanrail, IDC, and now not even talking about SAA, probably all still need a lot of cash. So obviously Eskom is very front and center because of the current wave of load shedding that we have. Firing the CEO at this point in time is probably not the issue. There's probably many other issues in Eskom. So I think that there's more capital will be needed to be supplied to Eskom so that they can roll out their capex plan and their maintenance plan and these type of things. The problem is that Eskom is a long-term story. It's not a one-day game to try and fix a broken power station, complete an incomplete power station. So unfortunately, there's a time element there, but definitely, if we look at the fiscal windfall that government's going to get from the commodity cycle that we've been in, I said to somebody the other day, I think it would be a smart idea to give Eskom more money. Otherwise, the economy is just going to suffer more.
The latest, the current leadership of Eskom had said that they may not need to actually, go out hand in cap to government to ask for more money. But it doesn't seem it's the case from what you are saying from across the board. What does this mean for the state's fiscus, for the state of finances, particularly its debt ratio?
Well, I mean, if you use taxes to bail out Eskom, that's probably okay. So use the commodity windfall to bail them out, that's probably okay for the debt ratio. I think the issue is if you raise more debt either on, well, you probably can't raise a lot more on the Eskom balance sheet, but if you raise more debt on the government balance sheet to bail out Eskom, that is a problem because then the fiscal metrics deteriorate and the debt to GDP ratio goes up, which is probably not where we want to be. I mean, we keep on hearing from all the rating agencies that we need to arrest the debt to GDP number and actually be on a sustainable fiscal path. Otherwise, we'll be downgraded even further. So that's why we say rather use taxes and use the tax windfall to help Eskom versus just taking the tax windfall and pushing it through into more current expenditure, which we don't think is a great plan at this point in time. But helping Eskom will probably help the economy and the consumer out there, because obviously there's only 2 ways that Eskom can get revenues, obviously through tariffs, and the second part is through more bailouts from the shareholder, and the shareholder is government. So there's not many other levers for Eskom to pull in terms of revenue.
Some of the issues, part of the 8 issues that you have identified, you've already spoken about the commodity price windfall. We've seen a lot of, mining companies doing quite well. This bodes well for the fiscus with the income from that part. But you've also talked about the implications for South Africa's credit rating when it comes to all these issues that are around, the resolve of Treasury to restrain spending, particularly on the public sector wage bill and also the state-owned entities. What is it likely going to mean if the minister actually sends out another checkbook to all these SOEs that are in dire straits as we speak?
Well, I don't think it's about sending out the checkbook. I think it's about, if you want to send out the checkbook, you make a lot of conditionalities, typically like we do as debt investors to the SOEs. Say, well, we'll give you a check, but you can't spend it on salaries. You've got to spend it on capital and on maintenance, and you've got to put all the controls in place to make sure that it's not more state capture on the balance sheet and that type of thing. So it's not about sending out the checkbook or sending the message, it's about sending the checkbook with a strict set of conditionalities on it. I think that makes a lot of sense to us. Using the tax windfall to pay more salaries does not make sense to us because that's just current expenditure. And I think the minister has already stated that there's no budgeted wage increases for the next fiscal year, which we totally agree with, because we obviously know that one of the big problems in the whole fiscal situation is the government wage.
Ian, before I let you go, let's talk about an issue that everybody is, talking about, the basic income grant. That is a lot of more spending. There's a divergence in views when it comes to that. What do you see happening come Thursday in the MTBPS, and what would be the implications of whatever action that the minister decides to take?
Well, now we're getting into the realms of politics, which I can't answer you. So I think there's one big question around the basic income grant. So I think in theory, it makes sense to do it, and all the good social attributes to it. I think the issue of it is how do we afford it? It's the same argument we have around the national health insurance. Yes, it's great on paper and it looks like a great social program, but what can we afford? What is the economy and the taxpayer base able to afford in South Africa? So it's always that trade-off between what we want and what we can actually afford, just like any other budget. And the risk is if the minister does it without a credible funding plan, well, the debt matrix of government will weaken, and I think the market and the rating agencies will take a very negative view on it. If he implements it with a very credible funding plan, well, then the market will have a look at it.
Ian Scott, the Momentum Investments Head of a Fixed Income Investment Unit. Thank you very much for your time.